Which brings me to another. I've read the notes you wrote in September, and it seems to me that we are indeed, or we have indeed entered the what you call the cycle of slowing credit growth.
Yes, definitely.
Yeah, I would. How long do you think this would last? That's first. Second, in this cycle, which markets and sectors will be vulnerable to this slowing credit growth and the resulting economic slowdown?
Well, I think credit growth definitely has slowed down. I mean, never before have we seen the collapse in credit growth to the same extent we've had it recently, and this not just in the US, worldwide. And I don't think that credit growth will come back anytime soon. It may stabilize, we were growing at an annual rate of 16% at the peak in the US. We're now growing probably at maximum 3%, and bank credit is actually contracting, consumer credit is contracting, and so forth. I think the consumer, if we start with the consumer, because the consumer is 70% of the US economy, is the most important factor in the US economy. I think in general the consumer his habits were characterized between 1980 and 2007 by replacing savings from income with savings from capital appreciation. This is a big difference, whether you have an income of 1,000 and every month you put 100 aside. That is a true saving. If you have assets of 1,000 and every year they appreciate by 20%, and you say, these are my savings, it's a different story. It's a very different story. And so in America, through the bull market in equities and in bonds between 1981, equities began in 82, in August 82, to essentially 2007, and throughout the appreciation of the housing market, especially in the last 7-8 years, it allowed the consumer in America to draw down the savings rate from income from around 12% in 1980 to 9% in 1990 and down to 0 recently. I think as asset prices are now perceived to no longer go up, I think, and the household has lost a ton of money. Believe me, a ton of money on every stock it bought, on every commodity it bought, on every foreign exchange transaction it did, and on its homes, a ton of money. The consumer will now start to save from income. And when you have a savings rate going down, say from 10% to 0, it turbocharges the economy. It leads to above average economic growth. Conversely, when you have the savings rate going up, savings is essentially taking money away from consuming. So if 70% of the US economy is consumption, you take it away from consumption, you have sluggish growth. I think for a couple of years, the US may actually not grow, and that is an optimistic scenario. That is the optimistic scenario. The pessimistic scenario is that we have really a colossal bust in economic activity, like has happened in the construction industry. And no country will be immune. I mean, I was just 3 days ago in Dubai, and I'm convinced the Middle Eastern property markets are in for a very rude awakening. It's also all on leverage.
The Middle East and its property markets, or property markets worldwide?
Property markets worldwide, but in particular in the Middle East. I mean, I suppose in Manila property prices have already started to go down. I suppose they're down about 15% from the peak, or even more.
The developers are not admitting that the thing here is that developers basically control the development. So when they see that prices are slowing, they just turn off the supply, so to speak, and ride it out.
Yeah, but the developers worldwide, when prices go down, they are first in denial because they want to sell. But when volumes decline,
Yes.
then it's obvious that the market is not as healthy as before. And we have big declines in sales throughout Asia for condos and homes. And the Philippines is no exception. And the developers, they just sit now on larger and larger inventories. So one day, one developer that is highly leveraged, not talking about the Ayala people, but some other players, they'll be forced to sell by the banks because the banks will not extend any credit to them. And I can tell you, since I follow stocks a little bit, here in the Philippines, shares of developers are down like 60–70% from the peak, some even more.
Yes, sir.
Then don't tell me that everything is fine in this property market.
No.
I rather believe the performance of stocks than the developers who are all liars. They're like miners. Every businessman is basically a liar about his business. No businessman will ever say my company is about to go bust.
Actually, you're right about that. I've been asking some people who invest in stocks, and I'm telling them, why are you not buying this property stock? It's down 60%.
Yes.
And basically the argument is, look, if there's going to be property collapses in other markets, and you are an investor looking at the same asset class, property asset, and you tell me that property prices here will stay while the property prices in other markets collapse, it's not going to be justified.
Yes.
And the second reason is that if your developers have been basically boasting that a lot of their sales are being made to overseas Filipinos. A lot of the overseas Filipinos who buy are engineers and doctors who have the option to live in the countries where they're working. Let's just give an example,
Yes.
the US.
Yes,
The
sure.
property market has collapsed there. That means that overseas Filipino worker there, that doctor there, has the option now of buying a property there, deploying his money in the US instead of the Philippines.
Yeah, sure.
So,
No, I mean, the one thing that I have to say, property prices, condos, this development there, the big building, what is it called?
the Rojas Tower,
The what?
the Rojas Tower, that's a project of the Ayala
Yes, yes.
before the crisis.
Yes,
Actually.
yes. It's about 10 years old.
Yes.
Because I looked at apartments there.
Yeah.
I mean, you can buy a very nice, say, condo there for $1.5 million US. But if you don't live there, who's going to rent it from you? I calculated the rental yield to be maximum about 2 to 3% after expenses. You just, because a lot of people also in Bangkok is the same. They like to buy a condo to live in there because they don't pay very high mortgages and so forth. But the rental market is basically dead. So unless they live there, they are then saddled with high management expenditures, and the condo stays empty. They still have to pay the mortgage and so forth. So people then have second thoughts. I tell you, in my opinion, at least half the demand of new developments has been speculative demand. That people bought because they thought, okay, we buy a condo, we can resell it in 3 years' time at a 40–50% profit.
So just going back to this one, you mentioned one sector, property, and then one region, Middle East, that will be in a big trouble. I mean, are there other regions of other?
By the way, in China, the property developers, like Shimao, is down from like $30 to $4.
Okay.
And the fundamentals of the property market long-term in China are very favorable, long-term. But it doesn't change the fact that you can have a big downdraft in property prices and in the share prices of developers.